To kick things off, would love to do some introductions. We'll start off here with Balder.
Perfect, thanks Peter. Yeah, Balder, Chief Investment Officer of Maven 11, venture fund based out of Amsterdam in Europe, very focused on everything related to infra, modularity, and sort of the DeFi and NFT ecosystems.
Hey everyone, my name is Joshua Rivera. I'm the General Counsel of Blockchain Capital. A lot of you might be saying like, what the freak is a lawyer doing on this panel? And that's a very good question. I have the great privilege of actually sitting with the investment team, so I'm this weird like investing GC, which isn't a real thing, but we made it work at PCAP. So yeah, we invest in all verticals of the space, about 170 portfolio companies, 2 billion in assets under management. I've been there for 5 years. Excited to see you guys, talk to you.
Yeah, I'm Clay at Figment Capital. We're actually very interested in decentralized lawyer technology.
Oh God.
But we primarily invest in the infrastructure layer. So scalability, interoperability, privacy, and UX across the board that can support the application layer. Yeah.
Hi, I'm Felix, Chief Commercial Officer at Chorus One. We're a Swiss-based multi-chain staking provider that also invests, and we invest mostly in like layer one middleware and stuff that's related to staking and like sort of strategic to our core business. I'm also just part of the investment committee, so a little bit like you, maybe a little bit more involved in the business side of running the staking operation generally, but yeah, excited to be here, and thanks Peter for having us.
Yeah, definitely, and thank you all for coming. We have a very diverse set of panelists in that the backgrounds and geographies that they all come from are, from infra, from legal to investing, like finance backgrounds. So we're trying to keep this panel as, broad and high level future outlook on the space, but also on interoperability. So to kick that off, I'd be curious to hear from our panelists, over the course of the past 3 years, we've seen many different hacks, many different types of bridges come to play, come to market, and many others still in development now. And I'd be curious to hear your personal or your fund's perspective on all of these different ways of interoperability and what you think might work or hope will work.
Want me to kick off? Perfect, yeah. So yeah, we've been very early on the sort of the modular blockchain thesis since 2019, early investor in Celestia. So our view is that that's the way towards real throughput and scalability. Obviously, one of the issues you see then is obviously you break somewhat of the composability across the board. So then, yeah, the bridging protocols and interoperability have become very important. And it's something that's a very hard domain, right? I think I looked up the number just before I walked here. I think there's around 2.5 billion lost in bridging hacks and exploits over the last few years. So I think that says a lot what kind of a difficult problem we have here. So it's something we need to get back. So we're very excited about, for instance, what yourself are building, but also other players in the space to make sure we get composability back, we get liquidity back, and especially the fact that we want to move these assets around multiple ecosystems, multiple chains, right? It's not going to be one chain. There's going to be maybe hundreds, maybe even thousands. So the app-specific thesis we are big backers of is slowly coming to life. But then we need to make sure that we can safely move these assets around multiple chains. So that's something we'll have to put a lot of work in over the coming years and still do. But so we're going to solve it eventually.
Yeah, similar to you, we have been big proponents of modular blockchain thesis for a long time. We do not love bridges because of the 2 billion or however much it is lost, and just the difficulty there. It's been a very, very difficult thing to prove. The reason why we invested in Polymer is because the novel use for IBC and just how proven that is. Just find that to be particularly robust technology, at least as compared to everything else that we've seen. And obviously, there's still a long way to go to develop. But yeah, so we're excited to see a proliferation of app chains and application rollups We think that having the ability to both be modular and communicate across chain effectively, efficiently, and safely is going to be really important. And so, yeah, we're extremely excited to see the space continue to develop.
Yeah, of course, we started out as like believing in the sort of interchain, multi-chain vision, and obviously when you have that world with many chains, you need interoperability between them. So we ultimately sort of believed in that, and there's the IBC ecosystem, of course, where that we really support from the start. And I think we saw in between that when IBC wasn't ready, or maybe not so many liquidity on Cosmos 2, that other bridges emerge, or other types, like sort of like shortcuts to like make it work, because really the liquidity wants to move between the networks. And I think that's also a part of the reason why so many hacks happened, that because many people did like a bunch of shortcuts, or like use like systems that weren't as mature, but the need was there. So I think IBC, it's really nice to see IBC also coming to other ecosystems aside of the Cosmos ecosystem. We actually ourselves have worked on this problem statement in the past. We have built one of the first like Tendermint and Solidity clients to help bring the sort of EVM chains to the IBC world. But I guess now there's been so much advancements in ZK technology and stuff that, like, for example, also Polymer is using, that makes it actually much more feasible to really bring them into the IBC world, and I'm really excited to see that and where this will take us, because there have been a lot of problems before, like being able to verify the client inside the other chain just based on like limitations that were there. And I think we're at a spot where this is sort of like a thing of the past, or is a problem that's about to be solved, and then we'll have like true interoperability across like all the blockchain ecosystems, hopefully.
Oh, yes.
Yeah, I mean, I think currently, in comparison to, we invested in a lot of bridges as well, probably 2 years ago, but that was horizontal interoperability. And I think the thing that's really much more interesting to us now is vertical interoperability, to where you can share the same security layer. So you have less risk associated with the $2.5 billion attacks that happen between having to send state proofs to someone else, or however it's fine, whether it's optimistic or atomic or whatever, right? Like there's always a fundamental risk associated with a horizontal bridging scaling solution. But in general, if you can apply that same technology to an ecosystem that has a bunch of layers that have dedicated block space for a certain group of network participants, whether it be an institutional rollup for DeFi, or like a gaming rollup for like a certain group of gaming groups of people, but like they still need this base layer, like primitive, and like the ability to swap. That's very attractive. That's very sexy. I mean, like Vitalik probably got it right, where he's like, the future is not cross-chain, it's multi-chain. And then, when you are thinking about bridging assets between like a Celestia ecosystem or a Cosmos ecosystem that's not secured through IBC, which is something that hasn't been abused yet, or Ethereum, whatever. That's when you have to really like pay much more careful attention to bridge design, because you are transferring assets between something across separate state machines. But I think from an end user perspective, what they really, really care about is speed and trust across like every single layer, without having gas prices be super volatile just based on user activity. So it's like the vision of Celestia, it's like multiple rollups, freedom to move between those rollups, and whoever can solve that interoperability problem is a highly valuable investment opportunity.
Awesome. I guess taking a step back at a higher level, not just about interoperability, what in this industry would you say is the most exciting to you right now? Like, where do you see, in the analogy of hockey, where do you see the puck moving?
So many exciting things, right? I think our biggest thing we're mostly excited about is still the infra layer we're mainly focused at. So Celestia coming to life, seeing a lot of rollups and teams already starting to build, using that data availability and shared security layer, and then allowing for, I think, a lot more use cases, right? I think if you look at what we have been doing today, we're still scratching the surface, obviously, what blockchain tech can offer and crypto can offer for a lot of application use cases. But obviously, like you already said, the high cost, high gas prices have all obviously been a boon to adoption across the board, right? So making sure we build out, further flesh out that infrastructure layer, build out the interoperability layer, and then we can really start to, I think, build mass applications.
We don't have to, go in order every time, but just to cover the dead space. So yeah, obviously, well, I don't know if it's obvious, but Blockchain Capital's been very focused on infrastructure for our entire tenure, 10 years that we've been in the space. So, very, very excited about rollups and ZK Tech. We led Matters round several months ago. We're also really excited about restaking, so we led EigenLayer, and also I think we just closed Risk Zero, so we're doing some really exciting things just in utilizing ZKs and proof markets to be able to create proof market applications or proof markets for kind of Web 2 applications, which is what Risk Zero is doing. So that's exciting. I'm going to move away from infrastructure just to shake it up a little bit. We're also really interested in gaming right now because we think that really the gaming is the next on-ramp for the next 100 million users for digital assets. And we think that that is going to happen probably via wallet interface, right? And that's kind of the most accessible market right now. And so we've looked a lot at that over the last 6 months in particular. Led around for a company called Ekaterina, which is building gaming communities across different universities in highly gaming-focused jurisdictions like the Philippines and other jurisdictions in South Asia. So that's been really interesting. And then looking at games that are willing to disrupt themselves in kind of an antithetical view from the way traditional gaming studios have taken, where they want to like lock out other developers and kind of silo their innovation and then get people to use their engines. So we think that there's a way to disrupt that using blockchain technology. We're excited about.
Yeah, I mean, we're also looking at gaming infrastructure. I mean, I guess from my personal standpoint, most DeFi is going to be institutionalized, or there will be most of those network participants will be highly specialized in performing financial tasks on chain. I think it's kind of sad to think that like 90% of internet users are going to be like in liquidity pools. It like doesn't make any sense, and it's like I don't want people to like look at CoinGecko all the time. So then it's like the way you get 100 million people, it's like okay, you can talk about like gaming, social, user-generated content. You have layers of like trust associated with social, right? Like if I'm American and I'm on a social website, and someone's Italian, they speak Italian, that's a barrier, right? Like, and that's the only group, right? But gaming is like I can play chess with someone in Korea, and as long as there's some incentive baked in, or whether it's gambling or whatever, that barrier of entry is like a lot smaller, right? And so that's very attractive from like a broader use perspective, and like we're spending a lot of time on like what needs to exist at the infrastructure layer to be optimized for games. Also, like ZK in general, I think is very interesting. We've been spending a lot of time on the hardware side, but also like what proving market's going to look like, and who is going to be doing it very, very well. We come from a background at Figment Inc., which is a proof of stake infrastructure provider. Proving markets are going to look very different, probably a lot more proof of work based, and toward like how the incentivization mechanism would look like from a decentralization perspective. But we see value there just from our experience, and like most of this computation doesn't need to happen off-chain, on-chain, but like what do those economics look like? I think is like an interesting conversation that's happening right now.
All right, I'll be the last one to also give the infrastructure pitch. No, I mean, yeah, we're obviously also mostly investing in infrastructure since that's also our business, and in the end, we're still like in the infrastructure phase of blockchain adoption, and I think that we obviously saw like some applications in the last cycle or like in between that sort of happened and that got some traction. And we're still also looking at those. I think especially like app chains, you know, partially we do look at stuff that has like some application focus, and that's what the app chain is for. So it's not just, you know, like some other piece where you can deploy your application, but no one really knows what it is. So not like just general purpose, like really utilizing what the app chain gives you. And I think the Cosmos SDK and sort of ABCI++ and other things really allow you to customize to like the app chain to your application, and then really seeing people use that. For example, like how Osmosis is doing it, and then doing like MEV in the blocks. I think that's like really interesting for us. So really like kind of making use of the infrastructure. And then I think maybe something that people haven't mentioned for us that's also interesting is sort of more the data layer. So still, you know, yeah, once you have the applications running, the state, everything is like secure, approved, whatnot, it scales. But then still, like many applications, you will need, you know, to have access to the data to kind of display, you know, maybe the API, like whatever it is in the game. And I think that's also still an interesting vertical to us. How do you set that up? How do you store that data? How do you make it available? How do you query it? And that's been always something we've been active in. So yeah, generally middleware, anything there you're gonna?
And shared sequencers.
And definitely shared sequencers.
Great, yeah. You know, I think it's a definitely interesting perspective on how gaming could potentially, you know, as Joshua mentioned, can potentially bring on the next 100 million users. We saw it wasn't necessarily DeFi or building smart contracts that brought the most users in this past cycle. It was mainly NFTs. So bridging that gap of, you know, this nascent infrastructure that these organizations are building and the average person that's out, you know, walking about in society, what would you say, at least let's, you know, stick on this topic for gaming and infrastructure, what are like the key components that you think are missing that can help really catalyze that jump of adoption over the next several years?
BDSM. What? Business development, sales, and marketing.
Your own forte.
I mean, I think the problem with a lot of layer one ecosystems or even L2s or whatever is they come from a place that's so academic, right? Which is extremely valuable, and you know, especially like Polymer, right? Like you're taking like an open source thing and then building a product on top of it. I think a lot of the issue is not being able to scale an ecosystem out the same way that you're envisioning a product, and like you can apply same principles to like scaling out an ecosystem. It's just like you just have to accept the fact that like you don't fully own this network anymore. But like strategies work to like gaining adoption that like can be applied from Web 2 to Web 3. And I think the main issue for like a lot of this stuff is poor UX, you know, from a, you know, non-crypto native user, right? Especially when you're talking about gaming or social, right? Like you don't need to explain to them, you know, DeFi, right? But also at the same time, it's like lack of feeling an obligation to do so, which is, I think, ultimately going to change. But I think a lot of the gaming-focused companies understand how important that is. To where, you know, if you're looking at some other layer, like maybe that's just not within their mind space when they're thinking about launching something. But a lot of these folks who are like focusing on gaming infrastructure know, it's like this is how you scale a gaming community. And like you have to go from 1 to 1,000 to 100,000, and then once it becomes 1 million users, it's its own thing that's just like, you know, growing because like the community is like engaging with itself. But like you need to hit that threshold of people, and that's like a difficult barrier to reach for a lot of like early blockchain founders.
Yeah, I would also highlight probably UX. I think in gaming especially, like UX is extremely important, that you can't like compromise things that maybe like DeFi users are like sort of fine with. Like, you know, you want like instant finality, you want there to not be like a clunky UX and I have to like sign with this wallet and whatnot. There's like a bug and I have to somehow look it up. So I think there's still a lot of room to cover there to really get to that point. If you really try to use some application, I think many things are not really there. That's why like the really simple things are the ones that like sort of got adoption, where it's really like, you know, just a few buttons like Uniswap, where that experience is like probably good enough, like UX, if you think about it, that hits like a Web 2 level, but it's still far away in many other places. And even there's not really, it's not really there. I think maybe also just yeah, related to UX as well. Kind of the, actually, sorry, I lost the track of it, but it's okay. The next.
I'll follow up to that. I mean, just to put a little bit finer point on the UX is like account abstraction in particular, where it's UX, but it's also just hiding the tech behind it, right, and making sure that you're not having to hold a seed phrase and like remember all this stuff, and so that's something that we're looking at as well. Just how wallets are being developed. We think that's a huge space for onboarding, and we think there could be a lot of kind of dovetailing with gaming that will happen with that. And then the other thing that I was going to mention is also just identity. So we're working through identity. We just led WorldCoin. Very excited about that, and we think that that's going to have a lot of synergies also with UX and account abstraction, as they continue to develop their wallet.
Yeah, I think that's the one, right? I think the account abstraction is extremely important. So we get the scalability, and now it's going to be so much easier to build these applications for developers, which are also easy to use by the end user, right? For so many people, it's still so hard to use this technology, and I think that's what we need to solve. It's already been said here. I think that the whole UI, UX is definitely front of mind for this year and coming years.
I mean, it's also just like simple overthinking too, like the wallet side of things. It's like if it's a gaming community, call it an account. Yeah. It's like you're trying to go from Web 2 to Web 3. It's like, what's my thing on any sort of Web 2 platform? It's a fucking account, And like, I'm not trying to ape into a liquidity pool. Like I need these assets to participate in this game in a certain way, and I think it's all these nuances where we're trying to redefine stuff so much, and it just makes it so unbearable to even try to dip your toe in, because it's like, it's so scary, right? And it's like, call it an account, like everything. Like, there's so many other like examples, but yeah, that's our hurdle.
Just accessible nomenclature, just like not using crazy words, which I don't know. This industry is really bad at naming stuff. So
liquid staking derivatives, restaking, MEV,
exactly.
DVT.
Yeah, so we need to work on that. That's on all of us,
Yeah, I tend to agree. That's what we've also observed with during our time building Polymer, is that, and that's the whole reason we're putting on this summit. We went to several conferences, spoke with many builders, many engineers, investors, other founders across the ecosystem, and it turns out not less than 50% of people actually are familiar with IBC. They might have heard the term, they might know what it stands for, but they don't know much further than that. And we realize, the space has been advanced and innovated on by academics and researchers, but we need to fill the gap with the business development and sales and marketing. So I guess on this topic of like account abstraction and making the user experience more accessible to the average person, how do you see that being bridged specifically for like a Web 2 experience to a Web 3 experience? And with this, like what I have in mind with this in terms of this, the context in my mind is examples like most users, most people in general, especially in America, have iPhones and they use the App Store. It's difficult for DeFi or for blockchain organizations to get onto the App Store, especially given like the value abstraction or value extraction / like value capture mechanisms that Apple and app stores have. So how, I guess with that context, how do you see like the space moving forward of bringing on the next group of users?
I mean, regardless of what you think about the Solana phone, we should be loving the fact that the Solana phone exists.
Definitely, I agree. I think it's in due time we'll see multiple organizations, multiple blockchain organizations come out with more user hardware. I mean, I think that's the only way to break the grip of the incumbents of Web 2 and how they're holding back like Web 3 greater adoption.
Well, I think also just like something you said, Clayton, where it's like we're not calling it a wallet. So I expect that we see less like wallet applications, wallet mobile applications, and more accounts for game applications that are really allowing you to have custodial ownership of your gaming assets, but they're not. This isn't like a game wallet that you download and you hold all of your game NFTs in, right? You have it within kind of the particular gaming ecosystems that you're in. Now, I think there will be some interesting, like can you have like one wallet that goes across all of those gaming ecosystems? Could be interesting to see that, and I think we probably will just for efficiency. But I think before that, we'll probably see some like abstracted wallets in ecosystems, whether it's gaming or something else.
Yeah, I think to the dApp store, right? I think in the end, you also said the word like, yeah, right, incumbents. I think they're like also like Steam or something. They have obviously like maybe they're in a comfortable position, right, with where it is, and they earn their fees from everything, so they don't have incentive to sort of switch to the Web3 model. And I think there's also like a bit of a negative sentiment actually after all this volatility that is in the space, and gamers don't want to be like exposed to like financial assets and like sort of see their money go away like that crazy, like the crypto DJs do, like the average gamer. So I think there's actually a lot of negative sentiment even from the community there. But I think, you know, once the experience is there and like there's really a crypto native game that really like captivates people and like onboards them to this new idea and of cross interoperable like sort of assets, then that will like sort of shift that mindset. But I don't see it like, you know, launching in the Steam store initially, but like sort of has to probably come like many innovations from outside of that space first, and then at some point they will like sort of slowly adapt, or maybe there's like a whole new platform for launching these sorts of games. So that's sort of my thinking how it would probably play out.
It's also just building the right content, right? I think a lot of us are chatting about infra and all the kind of stuff. We was walking around the GDC. Most of the teams building out stuff there is infra for gaming, but I think just building the proper content will also allow for a lot more people to come into the space. So I think content is going to be very important from here.
Yeah, definitely. No, thank you for sharing all your different perspectives on this. Well, I guess very similar perspectives on this. We're approaching time, so I guess this last question I want to leave relatively open-ended. I am curious what each of your teams are discussing the most, are most excited about see over the next like year or two, going into this next cycle of adoption, next cycle of attention to the industry, and just in general, open-ended question. Like, would love to hear more about the
well, I think many things have already just been discussed here. One thing we're very much looking into right now is cross-chain MEV. So when we start to go modular, we start to have tens or hundreds of chains. I think cross-chain MEV is going to be extremely important to solve that well, democratize the revenues and the profits that come from that cross-chain MEV, and make sure it's being paid back to the users on these chains, right? So cross-chain MEV is a big topic at the firm currently.
Yeah, I'm going to go soft here since we've talked a lot about the things we're excited about. I think like right now we're just looking at the macro conditions. We have this never before seen consonance of kind of a macro downturn in the economy along with a bear market. And so I think we're just really thinking about how can we maximize the time that we're in that macro condition in the industry. So like help our portfolio companies build really well, kind of like survive, avoid the distractions of the bear market, which oftentimes are fewer than the distractions of the bull market, so that it's a little bit easier. But really, we're about kind of how do we navigate here? How do we help our portfolio companies navigate from here to the next uptick, where all of a sudden they're going to have to be positioned to capture market, to be able to innovate quicker than the person next to them. So ideally, they're already in a pole position when there are more entrants into the marketplace in an upswing. So we're excited about that, but we're also trying to manage kind of all the pressures of a bear market right now.
Right. Yeah, I like that thought. I think we are also like making sure that the teams are like is in place, and also our strategy in terms of what we support or which ecosystem we're part of, where our resources go. I mean, now I'm speaking like more broadly also on the staking business side, that we are like sort of part of the communities that will be relevant when the bull market comes and when the applications come. And to that, it also means like helping the teams connect with other like players or like set up their infrastructure in a way that they can like then capitalize on it when it comes to that point. And that might mean, you know, just making partnerships. I think the great thing is also like, yeah, there's less noise in the bear market. So now you can really, you know, everyone is accessible. You can like shoot a DM to someone. They're probably going to answer, you know, if you're a founder or something, like really like we're bored and want to hear something. So I think, you know, yeah, it's a great time to start to build for the next cycle. And yeah, we're happy to be part of it.
I think not being necessarily pessimistic, but just more rational about the modular space, like coming from like similar operator investor sort of perspective. Like we run a lot of infrastructure on a lot of these layers, right? You know, there's obvious benefits, right? Like dedicated block space, you know, being able to create permissioned enclaves, be able to create like certain private enclaves, et cetera, whatever. But at the end of the day, you know, there's a reason why like Solana was super attractive from an investor perspective and from an end user perspective. It just captured everything. We need to find solutions that automate being able to support these 1,000 different layers. And if we don't, it's just going to get way too complex and the incentives won't work to share fees with the L3, with the L2, with the shared sequencer, with the DBT solution, with the MEV, with the searcher, with the validator. it's just shit all the way down, right? And so like, and because there's penalties associated with all these layers, right? Modular is sexy, like modular makes sense from an end user perspective, but if it's a pain to run, you're not gonna find enough people to run it, and you're never gonna get the scale that you wish you had. And so anyone that's like looking to optimize like supporting those layers, I think it's very interesting. I would love to talk to them because I have a lot of opinions on this. But you know, the 1,000 blockchain thesis of Cosmos, I think like 2 years ago, like, I mean, I think I love Cosmos. I come from a background of like spending a lot of time in Cosmos. There doesn't need to be 1,000 blockchains, so I mean 1,000 rollups maybe, but like also like if we can like find a way to support all of them, right? It makes a lot of sense. I'm sorry. But yeah, I think, yeah, my 2 Satoshis.
Yeah, so I guess to close out the panel, how would you in one sentence, or what would you say in one sentence to the builders, engineers, founders, investors, the greater community of the industry? What advice would you give to them to help us move the space forward together? And you can take a pause to think about think the answer.
I would say keep on collaborating, right? I think it's this whole ethos we have in this industry. I think it's such a collaborative nature, so different from any other industry, and I think that's what we need to continue doing.
You go first.
So yeah, I would say, look, it's still really early, and so just like keep your head down, keep building. It can be frustrating. I know when you're not quite finding product market fit, or you know there's not kind of the apparatus around the solutions that you're building to kind of achieve the original vision at the time that you hoped it would. That's frustrating for us as investors too, as we like help our portfolio companies. But we're still really early, and as we focus in this bear market, and people are building kind of parallel solutions to things, I think we are, as a team, extremely optimistic that there are going to be synergies across all these different verticals that people are building in, and so I'm super excited for when we see those things start to connect in the next 18 to 36 months. Who knows? So yeah, just keep going. It'd be good.
Yeah, I mean, like to your point, I think the most unique part about this, right, is like, technology is interesting in any industry. Money can be made in a lot of industries. Like the most unique thing about this space is the cultural element, and a lot of that is associated with like coordination and WAGMI vibes. Even though WAGMI was a lot more fun to say like 2 years ago, but also it's like.
Watch your mouth.
Yeah, but like like a lot of the things that people are building are complementary, and like even if like you are competing with each other, right? There's still so much more things that need to be built, and if you start sacrificing the cultural element to win in this space, I don't think it's a good thing to be selling to people that aren't here yet. Like a lot of people are here. A, because I know they can make money, sure. B, the technology is sexy, but like C, the one more permanent thing is like this is just a new version of like an industry that just like is not similar to any other place. And so don't be mean, I guess. It's like my opinion there.
Yeah, I would say maybe like, yeah, look for a real problem, I guess. Maybe, you know, I would say like people get lost a little bit in like something that's cool and shiny and like want to build the same thing because now this other guy is building it and all the VCs are thinking it's the next thing. So like sort of pivoting because it's a bear market maybe also, and you think, well, maybe I should be building this. But if you had the vision initially of what you're building, like keep building that. If that solves a real problem, if it doesn't, maybe then then you should pivot. But yeah, you have to be really thinking deeply about that, I guess, and consider where you stand. I would, yeah, it's my Satoshi here as well.
Definitely. I guess, you know, I'd like to add on as well, just based on, you know, my experiences in the industry and hearing from, you know, so many different types of people in the industry, one thing that I've realized that, well, at least one thing that I've observed with builders and investors that are working towards a similar vision is that they're staying true to the values of blockchain, the core ethos, and let's not lose sight of you know, decentralization and security. We see that many players, they tend to try to go to market faster and might cut corners to be less decentralized. But at the end of the day, that then becomes like a glorified like server. It's like a cloud. So yeah, let's as a community continue to think back on like the core values that brought us to where we are now. Thank you all for coming on this panel.
Me.
Thank you.
Thank you, Peter.